Welcome to our weekly investment update. It's Friday the 1st of May. My name is Chris Marshall. I'm Head of Investment Strategy here at Dragon Investment Managers. Now what we try and do on these weekly videos is really just give the salient points from the last few trading sessions, as well as some of the dominant themes that seem to be emerging. So as we look back over the last few trading sessions, right now we're seeing the FTSE in the first few minutes of trading on Friday down about 2.1%. But broadly over the week it's level. Most of continental Europe is of course closed today, or the markets are anyway, as it's Labour Day in many European countries. And as we look to the US markets, it's about 3.5% up from the close last Friday. Of course, they're yet to start their Friday trading session today. Futures are pointing down slightly, but of course there's always a lot of economic and business news that comes out between now and the US markets coming on, so that could rapidly change. When we look back over the broader length of time, of course, March we saw amazing or horrific drawdowns in markets. This was really that rapid sell-off from some all-time highs in the middle of February to really this the global pandemic becoming very much global in nature, with suppression activity and policy coming through from governments, which was all about retarding the growth of coronavirus, and that very, very rapid fire sale that ended around March 23rd. As we then came into April, we saw that rapid rebound, which was really pinned on the hopes of vaccines, of central bank action, of fiscal policy, all supporting the economy while governments paused it. And actually some of the major indices have posted the largest monthly gains in April since 1987. And so that gives you an idea of the magnitude of movements that we're seeing on some of the major indices. During the week, of course, we also saw some 7-week highs set in the European markets. So that was some more optimism coming through there. And again, markets are paying an awful lot of attention to what central banks are doing and what policymakers are doing, as well as keeping an eye on those epidemiological curves, the rate of deaths, the rate of infections, which seem to be past the peak now in many countries. And this reopening story is really spurring markets to make some positive gains. Now, where it's kind of a confusing matter for investors is while we have a lot of positives in terms of policy action and also decreasing viral rates, we are seeing some really horrific economic numbers. Of course, we saw the US come out with a Q1 contraction of minus 4.8%. This is against a consensus of 4%. It didn't really have a massive impact on markets that day, simply because these numbers are fully expected, but it does start to show the extent of just what the suppression of economic and social activity is having underneath. Of course, we also saw another big uptick in initial jobless claims in the US, just over 3 million, which takes us to around 30 million over the past 6 weeks. That's around 19% of the entire US labour force. And so these are very, very big numbers. In other places where we're seeing kind of the stresses emerge is, of course, in particular company reporting. We've seen banks come out this week really trying to set aside provision, or at least quantify the pain level that might come from this period of economic suppression. And the variance in how much they are putting forward is really showing just how different their economic view of the future is. We saw RBS come out this morning putting £802 million as a figure of what they might need to put for the provision of bad loans and such like. As we look to other places, of course, airline industry is one of the ones which was always going to be significantly hit. The airline industry has essentially seen a 99% reduction in passenger numbers. Earlier in the week, we saw Scandinavian Airlines come out saying that they were going to cut 5,000 jobs, really not just because of the near-term pain, but because of their outlook for future air travel. We saw Airbus furlough employees. We saw Boeing launch the biggest debt issuance, I believe, which was $25 billion US dollars. This really allowed them to, rather than go to the US government for assistance, it allowed them to raise cash within their own remit and on their own terms. And then, of course, we saw Ryanair come out saying that they are cutting 3,000 jobs. And again, their outlook is that they see a 1/3 reduction in air travel for the next 12 to 18 months. One of the points which was very interesting, which actually comes out from this, is the difference between very well capitalized companies, which were originally a lot of investors thought would be the winners at the end of coronavirus. And actually, what we're seeing is, of course, the policy action is supporting or even nationalising to some extent certain airlines, and they are the ones who are now looking really kind of to have a floor put under their economic issues. And so some of the policy measures we have to be very aware of can, of course, cause some market distortions. If we look to other parts of the economy, of course, we have seen some very positive stories come out. There has been some uptick in some certain tech names, although again, we are seeing some opacity in what they want to tell us about future earnings expectations. Really, I think is they don't know themselves just how severe and what their trajectory is going to be. Overall, we've seen a spending decrease of about 7.5%. That was the number given out in the States. And so we have to be aware that, of course, the central bank and policy actions do have to balance and offset to some degree the suppression of social and economic activity. Now, the optimism, of course, comes from the potential reopening of markets or even economies and countries. And we saw our own Prime Minister Boris Johnson step out last night and just say that he's going to deliver and unveil a comprehensive plan next week, just of how he envisages the UK of ending lockdown and the timescale, and perhaps a little bit more information around the parameters that will run to. He did, of course, leave enough in there to give us, or to even give himself room to perhaps extend lockdowns next week. And that wouldn't be too much of a surprise if we saw that. Certainly, as the UK has been talking about, we need to be very aware of this second wave as they talk about it. But optimism in other places is really coming from, we've seen a number of US states now reopen. We've also seen, of course, within the European nations, we've seen Austria being one of the first to reopen. Germany, again, has slowly ended lockdowns. And now we're starting to see plans for France, Italy and Spain to come through as well. And so rightly so, markets, as well as the oil market, which of course has been suffering with massive demand fall off, really start to take a little bit more optimism from these. Over the next few weeks, of course, it's going to be absolutely key to watch just what happens with infection rates. The hospitalisation rates that we've seen through many of the epidemiological and virology models haven't really come true in many places. So, for example, within the UK, NHS Nightingale, the 4,000 bed mega hospital, if you like, hasn't actually treated any patients yet. It's not to say that it was a mistake to build it. It has increased that medical infrastructure within the UK. But it does show that perhaps the reopening of economies can be done without the initial fears around these massive spikes in hospitalisation rates. So as we come into Friday's trading session, from myself and all of us at Dragon Investment Managers, we wish you a very healthy and happy weekend, and we will be back next week with a further update.